we're diving into the age-old debate that causes more family feuds than a game of Monopoly. Real estate versus the stock market. Which one's better? Now I know what you're thinking. Alex, are you here to bore us with numbers and charts? Absolutely not! This debate will be as memorable and illuminating as a hippo in a fluoro bikini playing the synthesizer. But before we start picking sides like a schoolyard footy game, let's break down what each of these investments brings to the table. First up, we've got the stock market, where fortunes are made and anxiety disorders are born. Stocks offer you the exhilarating roller coaster ride you never asked for. But hey, there's nothing like waking up to the news that your stocks have plummeted faster than your self-esteem after a bad haircut. But stocks are the rock stars of growth potential. They can hit you with those quick highs and are as liquid as a rock and roll concert ticket, making them easy to buy and sell. It's like investing in Mick Jagger. One minute you're riding the wave of satisfaction, and the next minute your portfolio's wobbling and gyrating like it's about to take a wild stage dive. Now, real estate is the tangible asset you can touch, feel, and proudly call your own. It's a cozy relationship, you and your bricks and mortar, and over time, it's a solid way to build up that equity. Real estate's the equivalent of that sturdy, dependable friend who's always there for you. Unlike stocks, your house won't text you at 2 a.m. saying, "We need to talk." No, it just sits there stoically, weathering the storms and the market crashes like a wise old oak. Now the million-dollar question, which one should you throw your hard-earned cash at? The answer? Well, it's like choosing between a comfy sofa and a high-speed roller coaster. It depends on your taste and your tolerance for risk. Let's unpack this a bit more, starting with real estate. As with any long-term relationship, you've got to commit. No one-night stands in the real estate game. Be prepared to hold on to it for a good stretch of time to see those sweet returns. And let's not forget, you'll need some serious cash up front, a decent deposit to waltz into the mortgage world. If you're willing to put in the time and effort, real estate can be your golden ticket. It's not just about equity, you've also got yourself an extra side hustle if you add in rental income, plus it might just appreciate like a fine wine over the years. But beware, it's not all sunshine and rainbows. You've got to factor in the cost of bills, repairs, insurance and renovations. Real estate's a needy partner, demanding your attention like a high-maintenance cat. Now stocks, on the other hand, offer you the promise of skyrocketing returns. It's the financial Tinder date of the investment world. You swipe right, cross your fingers and hope for a match made in profit heaven. But it's not all candlelit dinners and roses. There's anxiety, a few sleepless nights and heart palpitations thrown in for good measure. Waiting for those stock charts to move in the right direction feels like anxiously checking your phone after a first date, hoping for that "I had a great time" text. Unless you're investing in a broad index ETF fund, which I personally recommend, stocks demand a level of know-how. It's not just throwing darts at the stock chart and hoping for the best. You've got to do your homework to stay updated on industry news and market trends. Now let's get down to the nitty-gritty, comparing the returns of stocks versus real estate. From 1992 to today, the US average growth rate of real estate has been 5.2%. But hold on to your socks, because the S&P 500 has returned an annualised 9.65%. It's like stocks have been doing jumping jacks, while real estate's been doing a slow, awkward moonwalk. Now let's time travel a bit. Buckle up, because we're going back to the disco era. A $100 investment in the average home in 1975 would have you sipping champagne with about $928 by now. Not bad, right? But hold on, because that same $100 invested in the S&P 500 would have you swimming in a pool of money. $19,351. In a moment, we'll check in with Simon for the definitive answer to all this. But just quickly, whether it's real estate or the stock market, the best time to start your investment journey is yesterday. And for an instant low-cost entry point into the glamorous world of investing, Robinhood's your best buddy. They've made it so easy, it's like the financial equivalent of a microwave dinner. Pop it in, press a few buttons and boom, you're in the investing game. And the best part, it's commission free. No sneaky costs hiding in the shadows. Whether you're into stocks, ETFs, or even those wild and woolly cryptocurrencies, Robinhood's got your back. And they even throw in some educational goodies to make sure you're not just blindly throwing darts at the stock board. So sign up for Robinhood and make those dreams of financial glory come true, all while sipping coffee in your pyjamas. Links in the notes below. Real estate and stocks have been like the dynamic duo of investments, but stocks have been the Batman in this partnership. They outpace real estate in returns, but they also come with more drama than a Shakespearean play. There are personal situations and tax implications to consider. Investor behaviour also plays a big part. Owning volatile stocks can be more emotional, and if you're not prepared to hold on during the bad times, selling out at the wrong time can be devastating for your long-term success. Owning stocks can be like having a pet dragon. It's exciting, but it can also breathe fire at the worst possible moment. If you can't handle the heat, you might just end up with financial burns. So if you want a steady investment in something you can touch and feel, go for real estate. If you're after the adrenaline rush of growth potential, stocks might be more your speed. So here we are at the crossroads. Simon, which one's a better investment? Stocks or real estate?